Hi guys, C. Rachana Ranade here, and I welcome you all to my next lecture on basics of stock market. What I'm trying to do now essentially is that I'm sure by now everyone knows that I already have an entire lecture series, 11 lecture series on basics of stock market. I'm trying to give more concepts through YouTube, which might or might not be covered in that 11 lecture series, or even if they are covered in the 11 lecture series, maybe I would like to discuss a little bit more about that. So that's how I'm trying to progress with my basics of stock market series even on YouTube now. So today's topic, which I plan to do, is what? बताऊंगी जरा 2 मिनट रुको. First, let me tell you what we had done in the previous video on basics of stock market. I had talked about a very, very important concept which comes up during the account opening account opening phrase or phase, I should say. That is the concept of power of attorney. Very few people I came across who actually knew exactly what is power of attorney. There was a concept of e-power of attorney which we had discussed in the previous lecture. So if you have not watched that video, you can find it here. Do watch that first and then move on to this video, because it's a very nice sequence that we are talking about. First video we talked about how to open an account. Now, presuming that you have opened an account, now the next step is how do you place an order. So for placing an order, you must understand that there are various types of orders which you can place. And there were many viewers who said that we really don't know that exactly when to place a day order, when to place a limit order, what are the different types of orders. So I thought, let me just make a video on that. What could be the different types of orders? What are the meaning of that? And how do you actually proceed with placing an order on the exchange? I would like to thank Upstocks for sponsoring this video. So let's check the portal of Upstocks. What you can see on the screen, I'll just quickly explain. Here you have a plus sign wherein you can actually add whichever stock you want to buy or sell, or you just want to add it to your watch list. Just as an example, let me take Infosys. So I'm just typing Infi, and immediately it has given me certain options for Infi, whether I want to check out the NSE ka price or Bombay Stock Exchange. So let me check NSE. The moment I have pressed Enfi NSC, it starts appearing on my screen. You can easily watch it as well. Here I start getting 2-3 options here, whether I want to buy, whether I want to sell. So let's say I'm placing a buy order for Enfi. So I've clicked on buy. Now what do you see on the screen? You see there are different types of orders. First of all, you will see the complexity tab, in which you have simple or AMO, which is an aftermarket order. This typically gets placed after 3:30. The next one is a cover order. And the fourth one, OCO, is one cancels other. That's one type of order that they have. Many people also call this as a bracket order. Okay. So let's understand what are these types of orders one by one. Let's say I click on simple. In simple order type, you have 4 further options. Broadly 2 only. One is a market order, one is like a limit price order. So the moment I say I want a market price order, here you can see I can't type anything into buy price. Okay, this gets frozen out. Why? Because I'm saying that I don't want to bargain. Whatever is the market price, I want to buy it right away. But the moment I press limit here, see, this becomes an editable option now. I can press whatever I want. So let's say I want to bargain now. Being a girl, that comes inbuilt, that I have to bargain. I can't just take it at face. So let's say the price is 771. I place an order at 760 rupees. Okay. And if I say buy, then of course it will ask me for one more confirmation, but we are not here to directly buy that. I'm going to show you many possible options. Okay, so in this, I told you either you can place a market order or a limit order. Stop loss limit and stop loss market, these are like huge concepts. I'll just quickly tell you what is a stop loss. The word itself says that if I want to stop my losses, so just as an example, if I were to buy this same stock at 770 rupees and assume that the market price of this share starts falling down after I buy it, and it goes down and down and down till, let us say, 760. So I have already incurred a loss of almost 10 or 11 rupees, and I feel that that's the maximum loss I can bear. I don't want to go beyond that. Then I can put a stop loss order at 760 rupees. So what happens? The moment the stock price goes down and it touches 760, my stop loss order will get executed. What is the benefit? The benefit is that if the stock price goes below 760 also, let's say it closes at 750, I'm least bothered about that because my position has closed at 760 only. So my loss is stopped. It's capped. at 760. So rupee terms mein, it will be stopped at 11 rupees in our example. Okay, what is stop loss limit? What is stop loss market? These are very, very intense terminologies. For that, you can buy my basics of stock market lecture series, in which I have explained almost for 45 minutes what is the exact difference between stop loss limit and stop loss market order. The next position is either delivery or intraday. Delivery is that you buy the shares and it goes into your demat account. You don't want to sell it off on the same day. If your intention is to buy and sell it on the same day, then you choose the delivery position type as an intraday. Okay. TIF basically talks about, again, one more concept. Time in force is the full form for that. Either it's day or it is IOC. Day means what? Assume that I had put this buy price at 760, and today for the whole day till 3:30, the stock price never goes down till 760. It just goes up and down from 772 to 770, maybe 776 or 766 on a lower side, but doesn't touch 760. Then what? The order gets automatically cancelled. How does it get automatically cancelled? Because the time in force is only 1 day. So at 3:30, if the price doesn't reach 760, your order will get automatically cancelled. What is IOC? IOC is like Bajirao Singham style, abhi ke abhi, immediate or cancel. You don't have time to even wait for 1 minute or 2 minutes. That's an IOC style of an order. Okay, so I hope simple, all concepts are clear. Next one is an AMO. In AMO, again, you get all the similar options, so no need to discuss this same type again. CO is a cover order. Now what happens with a cover order? Let us understand. I can put, again, I'll put limit price only. I've put a buy price at 760, but immediately it asks me, what is your stop loss? So I feel this is the most disciplined way of putting an order. See, I feel that if you are a good investor, if you're a good trader also for that matter, your buy price and your stop loss price should be very much clear in your mind. This is more applicable for a trader rather than an investor though, because investor is least bothered about daily movements or a short-term movement. If you're a long-term investor, it's okay even if you don't go for a cover order. But if you're a short-term trader, this is a must. You must put in your stop losses. Okay, so assume that I feel that I don't want to go beyond 10 rupees as a stop loss. Okay, so I can put what would be my stop loss amount here, or I can even place how much rupees I'm ready to take as a hit. Okay, so that's a cover order for you. One cancels other. This is my personal favorite, because this says that my target price is this much and my stop loss price is this much. Both prices get defined at the same time. So I'll just quickly show you a demo for that. Assume one quantity I have to buy price is 760. My stop loss, see, again, let me just define it for you, 10 rupees. So the moment I press 10 here, it starts showing that it means that my stop loss will be at 750. I need not input this. I just need to put how much loss I'm ready to bear. Okay. Assume that with a 10 rupees loss, I'm expecting, let us say, 30 rupees profit. So I feel that today this stock should cross 800 rupees, just as an example. So I would press 30 rupees here. The moment I'm pressing 30, see 760 ka 30 add ho gaya, 760 plus 30, it automatically starts showing 790 in your target selling price. I can change this. If I say 40, it will start immediately showing as 800. Okay. Then you have types of stop losses as well. One is a regular stop loss, one is a trailing stop loss. Again, complex terms, but maybe we can have a separate video on what is a trailing stop loss, because I feel that deserves a separate 10-minute discussion on what is the exact terminology of trailing stop loss, how it helps you and how it can be dangerous for you as well. So as of now, I feel understanding the concept of stop loss and a target sell at the same time makes sense. Now, why is it called as one cancels other? Let's understand it in a very simple way. See, assume that this target selling price of 800 is hit. So today the stock reaches 800. Then my the stock which I have bought will get sold at 800. So what happens? This stop loss order will automatically get cancelled. That does not stay in the market. Okay. What happens on a contrary situation? As a contrary situation, let us say, instead of hitting 800, it hits 750, unfortunately. Then what happens? 750 to hit ho gaya. So my sale price will be executed at 750. This 800 rupees will get automatically cancelled in this scenario, right? So either this price gets hit or that price gets hit. whatever gets hit first, the other will get automatically cancelled. That is why I feel that this OCO, one cancels other, is a very good type of order which Upstocks has in its portal. So if I were to place this, I just say buy now. Then it gives a confirmation screen. It says that one quantity is to be bought at 760. The type of order is also given, complexity is OCO, one cancels other, and I say buy. Okay, see, the moment I say buy, then you can see here you have few more tabs here, orders, positions. I'll not show you what are my holdings. Okay, I'll just go to orders. In orders, you will say you'll see that the status of this order is open, and I've put a buy for that. The price is 760. I don't want this stock to be bought right now, let us say. So what I can do is I just check this. Okay, and then I have this option of cancel, and it asks me, are you sure you want to cancel this order? If I say yes, this order gets cancelled. Now you can immediately see that the status is cancelled. Okay, the entire purpose of this video was just to show you that what are the different types of orders. As of now, after seeing my various lectures on stock market, I've received so many comments which say that now we are pretty confident, we want to buy some stocks, we would like to buy some stocks, then how do we go ahead? So that's why I thought of making this video on types of orders. So go ahead, buy at least one stock of your choice, do some research for that. Just don't buy because I'm saying it. Do your research, buy at least one stock, jump into this amazing world of stock market. Do let me know your suggestions. In the description box, I have given you a link for opening an account with Upstocks. They have some promotional scheme going right now wherein you can open a free account with Upstocks till 31st of August. So I feel you should grab this opportunity and start your journey in this amazing world of stock market, right? Even if you have any other queries, I've started my show, hashtag Ask Rachana Show. You can put your queries in the description box as well. So description box basically gives you the link to the Ask Rachana Show, and it will divert you to the community tab. And in community tab, you can go on asking your questions. So feel free to ask whatever questions you have. Keep on your research to the highest possible pace. That's it from my side for today. Thanks a lot. Jai Hind. Bye bye.